Hello, everybody. Welcome in. Today, we'll be talking about AI and the impact on Bitcoin and robots and physical therapy and how to survive and raise cash after being done by a Ponzi scheme and so much more, including perp trading and big show today. I want to thank everybody for being here. It's Sunday. Let's get into it. This is called the AI Bitcoin Loop. And we're going to talk about some names I've never even spoken about before. And let me know if anything's working. It's very quiet here. And this is not financial advice, just a guy on the interwebs. And all the questions come from Patreon. A big thank you to everybody on Patreon. First question, though, is a very clever question from Kyle. I'm fortunate to have a place to ask a question, thought experiment like this. Regarding the video about AI total addressable market versus Bitcoin total addressable market, if AI will grow the pie and be much bigger, doesn't that imply that instead of one quadrillion of global assets, there'll be even more global assets driving up the total addressable market of Bitcoin? I saw in a video you mentioned that Bitcoin is an AI play because AI investors will park profits in Bitcoin. Super interesting. And I like the way you think. So a quick reminder to everybody what that video is about. I decided, because if people are saying, oh, Bitcoin's bigger than AI, and I'm like, no, it's not. So I decided to dig into it and calculate all the total addressable markets and the TAM exposure for all the different areas, industrial sectors like transportation and finance and energy and, assisted living and humanoid robots and stuff. We'll talk a lot about robots today. And I calculated the TAM for both Tesla and for Bitcoin. And basically, all you need to know is blue is a lot bigger than red. Red is Bitcoin, and blue is the total addressable market. Total addressable market of Tesla. So it's far bigger. But it begs the question: if the pie gets bigger, how much bigger does, guess what, Bitcoin get? And that's what I try to calculate here. And again, these are numbers that are actually based in fact. So let's talk brass tacks for a second. This is AI's impact on GDP and the global AI market and how big it's going to be in the time frame 2030 to 2035. Compound annual growth rate would be somewhere between 20 and 40%. It'll add about 4 trillion. It'll be worth about 4 trillion. And that'll contribute about 16 trillion by 2030 to global GDP. And that will bring global assets under management from $500 billion to, you're going to see this number a lot today. When I say 1Q, it doesn't mean quarter one. It means 1 quadrillion dollars. So basically, the global assets under management will double from $500 billion up to 1 quadrillion. And by the way, there'll be a lot of money printing over the next 5 years. And therefore, don't get too excited. It's all going to be debased as well. So it's not hard for the assets under management to double, because the debasement effect will eat a lot of that away. And the AI productivity boost. Actually, I made another Patreon post this morning about the impact on GDP of different growth rates and how much will be stimulated by AI. And it's stunning, the difference between just 2 and 4%. But here, I believe it could grow GDP by 3 to 5 or 5 to 8%, which will add another $150 trillion in wealth over the next 10 years. Now, let's get back to what this means for Bitcoin. By the way, Bitcoin's up $2,000 today, so we're not dead. Nice to see it rise on a Sunday. But this is the Bitcoin total addressable market scenarios with AI-driven growth. So we have different global assets under management today, $500 billion. Moderate growth with AI, 700 trillion. This is all by 2030. And aggressive AI boosted growth, 1 quadrillion. And ultra asset growth, 1 quadrillion as well, but different levels of Bitcoin penetration. So I assumed 1% Bitcoin penetration of $500 billion assets under management, pretty much where we are right now. If 1% of assets under management today went into Bitcoin, the price would be $238,000. Now, if that goes to 2%, and we get 700 trillion, the price would go to $667,000 by 2030. Now, if we have an aggressive AI-boosted assets under management going to 1 quadrillion, but the penetration remains at 1%, then we only get to $476,000. But remember, Morgan Stanley came out 2 to 4% is a good allocation. So if they're saying that, think of the 2%. And if it does go to 2%, the price will be $1 million. That will be 2% of 1 quadrillion, and the market cap of Bitcoin will be 20 trillion, which the price will be, I call it $950,000. Now, if we do go to 1 quadrillion in assets and the penetration is 5%, 1% more than the Morgan Stanley aggressive portfolio, market cap $50 trillion, we get to $2.38 million. Crazy. And by the way, if the market cap of Bitcoin matched that of gold, just alone, the price would be $1.53 million. So the question is, will we get to 1 million, 1.53 million, 2.38 million? The answer is yes, we will, as long as Bitcoin survives. So the big story, and this is a great question. I really love this question because it makes you do my little math numbers. AI market will be $1 trillion plus. Bitcoin range, at least 200 to 500K easy. Long-term 2030 plus will get to up to 2.38 million. But remember, the question that you nailed is AI grows the pie. It expands the wealth. And then when there's more wealth, people need to park that wealth somewhere. And the big question you all have to really, with your pen and papers and your little Excel spreadsheets, is that there, the Bitcoin penetration in the middle, is it going to be 1%, 2%, 5%, 3%, 4%? I don't know. But as the pie grows, even if it's 1% across the board, it'll still go up. So thank you so much for the question. Next question. This is about robots. Here we go. From Lumux. Hi, James. I realize that scaling production of robots is going to be advantage Tesla, but how does Figure 03 robot stock up against Optimus? Thank you for your tireless efforts. And robots. Hey, James, as always, thank you for everything. Question, Optimus v Figure 03. Could Figure 03 take Optimus market share? Brilliant, brilliant question. Now, I had to dig into robots. I know quite a bit about Optimus Figure stuff. I actually painstakingly watched the videos and watched a couple of things that are very, very important. And here I am. I'm not a robot expert. I'm pretty good at finance, but I did notice something that was quite strange. Figure 03, they completely pivoted, right? There was talk, I think in April of this year or before, that they had deployed a fleet of robots to a company called BMW in a place called Spartanburg. I think it's in Virginia, Spartanburg, South Carolina, somewhere like that. Sounds like a German place, but it's not. It's in the US. And they had deployed, apparently, these Figure robots, and they were doing end-to-end processing. But something happened because now there's no more talk of industrial commercial use of these robots. They pivoted. Why did Figure 03 pivot? Because now you go to their website. All over their website, it'll say, the future of home help is here. Figure 03, general purpose humanoid robot for every day for home help around the house. They got demos of laundry and dishes and vacuuming and delivering drinks and stuff like that, which all look pretty precarious. Now, I did look at the videos and I saw some things that were a little concerning. And of course, this is why Elon Musk says there's 3 things that are very important to the robot. 1, the hand. 2, the brain. And 3, the durability of everything together. So Tesla has the brain, and they've been working on the hand extensively for now years. But when I looked at the Figure 3 doing dishes, first of all, it had 4 fingers and a thumb, but the way it opened the faucet, which was a handle, not a twirly thing, it was like a claw with 1 finger. So it was very, very unrefined. I wouldn't call it precise, dexterous manipulation. That's complete BS. And then the way it had to pick up the dish to show you how unprecise it is, it literally had to push down one edge of the plate so it would tilt up, and then the other hand could kind of grab it. And that's not how humans operate. So they took a bit of a shortcut there, and it looks like a bit of a party trick. So the hand is very important. I think Figure said we can't figure out the hand. Therefore, it cannot be used in the BMW factories. Therefore, let's pivot. Let's not go head-to-head against Elon Musk and Tesla. They've got $40 billion in cash, and they've got manufacturing at scale and global factories and stuff like that, and the brain. Let's pivot to the B2C use case, which is the home. Okay, so here are some of the cons I see and why you shouldn't be worried about Figure 3 eating Optimus's lunch. One, it's not safety certified. Now, the reason I say this, if you have a robot running around a factory, yeah, it's going to bump into things and may get quashed by a crane or bump into an employee that will have workers' comp. That's all fine. But if you have one of these things running around little children or little dogs or the elderly around the house, it can be quite dangerous. And they're not, as far as I know, safety certified yet. And the hands, they apparently have 16 degrees of freedom, but I didn't see it. I didn't see anywhere near human dexterity. It was like I cut my hand. I remember a long time ago, I lost my thumb, and all I had was a big thing on my hand. And literally, my left hand was just like a club. And that reminded me of how this guy had to open the faucet. So there we are. Now, there's a couple of other things I did notice too. They have a palm camera, which is helpful for data occlusions, but it's exposed, which you get dirty, messed up, won't be able to see through it, etc. So it's kind of weird putting, does anybody else have a camera on their palm? Any humans out there that has that? So that's kind of weird. And then they have this skin. It's kind of like a nice fabric padding, but you know how dirty that's going to get? And waterproof. You got this thing around sinks and dishes and stuff, outdoor use. It's going to need lots of covers and lots of replacement for the fabric. And that will be another pain in the butt. And then runtime. Apparently, it is a 5-hour, 2 kilowatt battery, which means it'll need to be charged all the time. And that charging takes 30 to 50 minutes. So basically, every 5 hours, it needs to charge for nearly an hour. And that is a bit of a problem. So it is pretty cool that they have this. I think it could be construed as intelligent that they're pivoting to domestic use because Tesla's not going to be playing in the backyard. And why? You don't need to sweat about the humanoid robot from Tesla called Optimus. I believe it'll smoke Figure 3 because nobody beats Tesla at making stuff. Not even the Chinese. Okay? Nobody comes close. And Tesla can amortize actuators and gears and trains and electronics and assembly across massive gigafactories, machines that make the machines. And they have automotive grade suppliers. They will be able to crush bill of materials and unit costs. If you've ever heard Jeff Lutz talk, he talks about unit cost all the time. And that's crucial where humanoids are competing against humans for labor hour. The dollar per hour, every cent saved will be massive. And then their data training and infrastructure. Tesla has a very mature vision stack, labeling engines, simulation engines, access to massive perception data sets from cars, etc. This will give it a flywheel for autonomy and also learning across. I always imagine that you might want a sushi chef, but you just paid for an Optimus security guard or a dog walker. Maybe it'll be an add-on to an app store type of device where you order the sushi capability or the tire changing capability, whatever else. That's going to be something that Tesla will be able to do, and others will not be able to do it. Vertical integration. Nobody is as vertically integrated as Tesla. They make their own batteries, they make their own seats, they make their own everything. And very importantly, they'll immediately have a big customer, not BMW and Spartanburg. They have themselves across gigafactories, and they can internally deploy thousands of these units on its lines, on its logistics, in very controlled environments with repeatable tasks 24/7, built-in service teams, accelerating reliability, lowering cost, proving the ROI faster. And then they can deploy them at partners, suppliers, all that type of stuff. And then they have incredible safety, compliance, and service network as well, because they do this for cars, which is automotive grade safety. So don't worry, the competition are not coming for robots. Let me see. What else do I have here? Total addressable market too. I was thinking as well, it's not just, okay, the massive pivot from Figure to B2C, and we all know B2B is a lot bigger than B2C. It always has been the case. But here I ran some numbers. Basically, the total addressable market for commercial robots in 2030 will be at least $150 billion. Domestic robots may be at a stretch $25 billion, But remember, it'll be a luxury item for very rich households. The people that can drop $50,000 a year in one of these things, or 30 grand, or whatever it is. It's going to be a lot to have a little party trick. Show your friends, hey, I'm having cocktails party tonight, and my robot will serve you some drinks. Come on over. Yeah, it's cool, but it's with those hands. Make sure you get some of those red cups, the plastic ones that they use at outdoor parties. Don't use your fine Italian glassware. So anyway, TAM, 150 billion for commercial robots. That's what Elon Musk is going after. Domestic robots, maybe 25 billion, so it's a fraction. CAGR is far lower, and the ROI is far less as well. So again, sorry for being long-winded. Figure 3, nice trick. It's not going to go anywhere near what Tesla can do. Guaranteed. Guaranteed. Take that money to the bank. Next question from Mr. Vix. Thank you, James and team, for your incredibly generous and helpful insights. Looking at income potentials, and would love your input. I have amassed $1 million at age 40. Woohoo. That's incredible. Really very impressive. And well done. Good trading. Zero debt. My goal is $10,000 a month income if AI takes my job. Swing trade. So here are the 4 options. Swing trade, you're using your IADSS tools to make 6-figure income per year. I've been trying to do this for 6 months, semi-successfully. I only trade spot, not smart enough to do fancy stuff. Can this work in a bear market? Second, stick it all in STRC and make 100K per year. That is the 10% on $1 million, and worry about nothing. Buy 5 Tesla Model Ys and use them as robotaxis. Not sure how I charge them all. And any better income idea? Thank you for all you do. So if you want to make good money month to month regularly, and there are thousands in the community that do this, and I started in the early 90s with this too. Cover calls, make money, buy real estate. Cover calls, make money, buy real estate. Wash, rinse, repeat. Build a bag that generates income. Now, simple method. I won't spend long on this because we had a lot of questions to get through. I would do half covered calls on mean reversion. Spend the time to learn to do covered calls because it's glorious. I'm selling calls now all the time, selling them against Tesla, my Tesla position, selling them against CleanSpark the other day. And you can make a lot of money. A lot of money. It's easy money, but use the mean reversion spike to tell you when things are completely overbought. And then with the volatility, grab a ton of premium, let it expire, and then wait. Sometimes, having the plan of making exactly 10,000 every month is a fool's errand. Think about doing it every 4 to 6 weeks. If you don't get it 1 week, wait. Now, the other question you mentioned is, can you do this in a bear market? Yes, you can. You can play the other way too. And it works almost just as good. And the other question too, what I do is I do half covered calls, but paper trade first, get experienced, get a process, get a tool, look at other experts in the community. And also the other half, you could do STRC. Now, the big question with STRC, if you throw $500,000 in there, you get, say, 50 grand a year. That is, say, divided by 10, 4,500, divided by 12, 4,500 a month. That gets you halfway there safely. But the question is taxes. If you're doing this, short-term capital gains, if you're in a high jurisdiction tax place, that's going to eat a lot, maybe as much as 50%. So watch your taxes. Next question, or write things off against your income. Nibble my waffle. I just listened to David Sachs and Mark Benioff have a conversation at the Salesforce annual conference, Dreamforce. They were talking about the AI race with China. In your opinion, what ramifications would occur to the world if China or any other non-US country wins the AI race? Brilliant question. And this is what everybody should be thinking about all the time. Now, I have a lot of thoughts on this. I'm not going to read them all, but I'm going to give you the 4 buckets, and I'm going to give you my thoughts written down, pause, and hit it. But the first thing we need to think about all the time is economic impact. As you covered the very first question today, AI will add trillions to GDP, okay? And 70% will go to the leader. Winner takes most. I don't care if it's China or the US or maybe Brazil, maybe somewhere in South Africa. We don't know where the winner is going to come from, but the winner in AI will take most because that's the way of the world. And I reckon if all this GDP is made by a winner who is the leader in AGI, AI, XAI, Tesla, think about that, they could stand to make 70% of that going to the leader or the country, whoever. And within the country, there will be one or two massive leaders. China winning AI means US loses, the West loses, Europe loses, etc. And American tech giants like OpenAI and Google would face tough competition. The question is, will Chinese AI be allowed to run the US? That's the other thing. Also, there'll be jobs inequality and federal budget problems because if China wins, the US middle class will be hollowed out and the US government is toast, as everybody else. We don't want China to win. This is why I call this the nuclear arms race of where we are in this decade right now. The other problem is national security. AI will drive absolute military superiority. I started talking a lot about a company like Anduril and the advantages they had. Whole video prepared now, but I didn't share it because I didn't want people to be upset. It's like, oh, he's a warmonger. No. These are defense technologies. They're not designed to kill. They're designed to prevent killing from happening. But anyway, check out Anduril too. It's pre-IPO. But literally, the world is changing. I gotta zoom out again. The world is changing very rapidly. The way warfare is conducted will change very rapidly. There's no way the planet Earth is going to all become peaceful and sit around the campfire and play guitars and have a good old time. Humans like to fight. Humans like to kill. I don't understand why, but that's not going to change. Sorry, but it's very, very important with the way AI is advancing. Everything is changing very rapidly. And there are things that are kind of scary, like hypersonic missiles, drones of swarms, etc. AI weapons will completely change everything. Having an aircraft carrier is the most ridiculous thing in the world because it's a massive target. And yeah, you might have drone defense systems, but do you have drone defense systems for 1 million drones hitting you at the same time? The answer is no, you don't. And that's the problem. So little things like that are kind of concerning. And then you got cybersecurity and espionage threats. AI can hack into things, cripple infrastructure, you name it, hack into the electric grid, satellites, espionage backdoors, etc. This is going to be a huge problem. So, number one, economy. Number two, national security. Number three, geopolitical and cultural consequences. If we are now slaves to China, we have to convert to their authoritarian policies. I don't like things like central bank digital currencies. I don't like digital IDs. I don't like that stuff. I don't like a government telling me what to do. That's just me. Maybe some people like that. I don't. And therefore, I think it would be very bad if China took over. And surveillance and erosion of culture and ethics and all that stuff. Not good. Not good at all. Finally, call to action for the US and the West and Europe. I hope the Europeans can figure this out too. But literally, we need absolute deregulation. We'll zoom out for a second too. There are states in the United States that are trying to regulate AI. Actual states that are trying to keep us behind. They think we live in a little safe little chamber where there's no outside influence. You cannot stop AI. You cannot regulate it to death. You have to let it be free and understand you're in an arms race here. Okay, it's very important. Do not let regulation choke your AI to death. Also, you need to boost R&D investment. That means electricity. That means data centers. That means models, and help support companies that can build the best AI. Also, we need to be able to attract the best talent in the world. Do not close the borders. Bring in the best people, which basically half of all the best AI data scientists are, guess where they're from? China. Okay, they've got really good brains that work really well with AI. So closing the door to the Chinese AI professionals is a bad idea. Bring them all in if you can, and attract more talent as well, because this space is moving very fast. So they're my thoughts about the Benioff Sachs conversation. I could be off base, but they're the four big things that are, embrace or die. Same thing as I always say, you have to embrace AI. Do not regulate it to death. Do not turn your back on it. Leverage it and plan to win. Next question. This is a bit of a sad one. Retiree Dilemma. Cool handle. Thanks, James. Your dedication to help people is awesome. Woohoo. 7 days a week now for nearly 5 years. Never missed a day. I am 73 years old, retired, and have 2 amazing private places in which I live, one in the US and one outside the US, both fully paid for, no debt. But I lost 90% of my cash nest egg in a Marin County real estate Ponzi a few years ago. So now my cash flow is very low. I need to maximize income since it costs my wife and I about $100,000 a year to tread water. I do have 1.5 Bitcoin, but don't want to sell quite yet. Good idea. Hold on to that. I'm trying to decide how much Bitcoin I should sell and rotate and how much I should hold on to. Unfortunately, I bought MicroStrategy at the top and it's down about 25%. I really need a faster horse. Was waiting to sell when it hit break even for me. Not sure when that will happen now. Which one of your models would be best to accumulate more dollars for living over the next few years? I have some basic trading skills, but nothing fancy. Options are confusing for me. I need to recover my nest egg plus generate cash flow. If you have any info, can you provide? Greatly appreciated. So I would love to tell you that at 73, you can start becoming a professional trader overnight and start generating cash flow. But if I did, I would be an idiot and leading you down a dark path because that takes a lot of time, dedication, skill, and you're under a sense of urgency right now. So I'm not going to recommend that path. Okay, that would not be clever. Now, out of personal interest, Marin, very close to where I am, and I had to dig into this story. And the Marin County, California Ponzi scheme, and this is Tina Benson. I think she is a victim. I dug into the whole story as to what happened. And the reason I want to spend a minute on this is I want people to be aware that if it sounds too good to be true, it is. And not only there are like 99% of all cryptos a scam, but there are scams that don't actually appear like scams. So let's look at this Marin County Ponzi Details. And just quick numbers, 1,267 people invested in this. The company, the Ponzi, said they had 70 properties. They did. The estimated value of the properties was $550 million. The debt was $400 million. The amount owed to investors, over $300 million. They pulled $350 million from investors. And the proceeds from the bankruptcy was $436 million. So the amount less the debt of $400 million, less the proceeds of $436 million is only $36.5 million. They pulled in $350, paid out $50 to the people that smelt a rat and got out early, and left all the others holding the bag. That's how a Ponzi works. But it's shocking to think that 1,300 people that were targeted, they were all elderly. They weren't 30-somethings. They were older people, 65 plus, with lots of cash. And they were targeted and fooled into this thing that they bought into that actually had no net intrinsic value because there was so much debt because the insiders were pulling all the money out and using it for themselves. So everybody, do not do this ever. Don't buy these timeshares or these real estate deals and get co-ownership. We'll talk about tokenization in a minute, which will make hopefully all of that more just and fair in the future. But that's the situation. The average invested by each person was $276,243. And I calculated that by the amount raised divided by the number of investors impacted. This is pretty wild. Now, let's get back to your situation because, again, everybody, do not trust anybody and do not invest in things that you cannot feel and touch and see and know exactly how much you own, net of any debt, etc. Let's talk about some of the options you have. And again, I don't know your exact financial situation. I don't know how much your real estate's worth. I know you got 2 properties, one outside the US, one in the US. The one in the US is probably worth more than the one outside the US, but you never know. If it's in Monaco, that could be different. But I would really consider selling one property. Okay, you get immediate liquidity. I don't know how much you get, maybe $500,000, maybe $1 million bucks. Also, one thing I've learned in life, the more stuff you have, the more headache you have. And the older you get, the less headache you should have. It's okay if you're 30 and you're managing multiple properties, etc. But I manage properties. It's a headache. It's a constant headache. And I'm getting to a stage where I don't want to do it anymore, but I still do it. Anyway, emotional disruption. All that type of stuff that's there. There's a lot of thoughts putting on here. Simplification. If you reduce the number of real estate you have, you reduce expenses and headaches and taxes and insurance, which is very burdensome on multiple properties. Moving around as well, travel is a pain. And transaction costs, I don't know how much it'll cost to sell or where it is or what taxes you have, but I think that's definitely one good option. Also, another thing you could do is do a reverse mortgage on the property. Lots of details here as to how you could do it, but reverse mortgages are a good way to pull out the cash you need from the property. Don't worry, if you have real estate, say it's $1 million property, if it's in Marin, it's probably $1 million plus, many millions even. Pulling some of that out, have a reverse mortgage so you can survive on that instead of selling the place. That's a great idea too. Other ways to raise cash too, you got a home equity line of credit, but they tend to be expensive. You borrow up to 90% of the home value, but the interest rate's high, 7 to 9%. You can rent out the property, your holiday home outside the US, or when you're outside the US, rent out your US home. Make a lot of money that way. Cash out refinance, another option. A home equity investment. You can sell a share of your home appreciation for upfront cash without monthly payments, which is also a creative idea. Some of these things are not exactly very well tested. So you have lots of options by which to go. But basically, what I think would be the best way, short path, is start with a reverse mortgage or a home equity line of credit for quick, non-disruptive cash. Long term, sell the less used property, probably the foreign one, for a lump sum. And the money you have from that, you could do an Airbnb in different locations. You don't have to be locked down to that same place. And I know people can grow attached to real estate and properties. It's hard to let go, but also think of the headache you're saving too. So there are some of the options. I'm very sorry about the Ponzi, but I share this question because remember, everybody out there, everybody is out to get you. Scammers everywhere. Do not invest in any of these things. Be very, very careful. Very careful. And by the way, this was, I think, an accountant in Novato, California, who set up this whole thing, who had a long history of being a complete scammer. Like, he was like 20 criminal charges against him before he even set this up. So if anybody spent 5 minutes doing due diligence, they'd quickly be able to understand that the guy heading the Ponzi was a scammer in the first place. Anyway, this is kind of a broader investment lesson for you all. It takes a lifetime to make it and a second to lose it. Don't get scammed. Don't give your money to anybody, ever. Next, Guti. I'm a 24-year-old investor and I've been following you for 1 year now. Woohoo. I love when young people follow. It's great. I recently started my physical therapy career and I love the profession. I feel that healthcare is a sector that tends to fall behind in advancements such as AI. I recently came across Hinge Health, which is an AI-powered platform that gets involved with patient care. With the changing world, I'm curious to see your thoughts on the stock and if it can be beneficial for evolving physical therapy care and be worth investing. Thanks for all the hard work and all you do to change lives. This is cool. So I like physical therapy. We all have ailments like bad backs, bad necks, bad elbows, shoulders, knees. I got a lot of that stuff. Let's look at what this is and why. Again, real quick. Few things that are really cool about this company. They have AI for motion tracking and personalized treatment plans. They can actually profile somebody over the web using AI, and it cuts physical therapy costs by 50% and reduces pain by 68%. These are the big takeaways. Now, if you can find a way to leverage this for your practice to be able to service more patients better, faster, that's pretty cool. Also, they have 55% growth. They're doing very well. And this is the most important thing that I discovered, 98% client retention. And they're planning to expand into ways of getting coverage by some state plans too. They have a path to profitability, good, and lots of positivity around it. They just had an IPO. And they have 413 million in liquidity and no debt because they raised the money in the IPO. That's all really good. Let's look at a couple of things. The cons of investing: huge stock-based compensation, nearly $600 million in Q2. But that typically happens after IPO-related vesting schedules, but it also caused huge dilution. The company reported that big loss because of the stock-based compensation, which we'll talk about in a minute too, about another company. And Hinge faces strong competition from Sword Health, Omada, Kaya Health, and others. So it's going to be a very competitive space, but their 98% retention is incredible. And if they're helping people with pain, all for it. There is some regulatory and expansion risk. They may not get the healthcare insurance, Medicare, Medicaid that they need. And the chart is not too pretty. Let's talk about one thing. This is the stock-based compensation. You see the pink here, nearly 600 million bucks, which basically wiped them out for the quarter, but it'll cause dilution. I'm not going to eat into the cash pile. Let's look at the chart real quick. You can see here, they IPO'd back in May. It shot up beginning of August, probably on the AI revolution hype. Everything with AI in it did well, and now it's kind of mean reverting down. Trend is down, heading to around 40 bucks. Not exactly perfect. So the conclusion, high growth, AI healthcare, trading at 7 times revenue, which is reasonable. Heavy stock-based comp, that should be passed after this quarter, but it will cause dilution in the shares, which will be reflected in the price. Expect this to go down a little bit more, perhaps. We'll see. And they do scale. They have preventative PT to cut costs and improve outcomes for people. And I think that's wonderful. Embrace it. Use it. Buy the stock. Maybe not, but use the technology. Hope that helps. Next. And anybody out there is actually thinking of leveraging AI to do stuff. It's incredible what AI can diagnose and how it can help your business. I gave an example the other day of a lawyer that has eliminated 75% of the staff, hired a junior person, and used AI to do all the legal stuff. Next one. From Crypto Degen. Thanks for all you do. With the recent liquidation event on 10th of October, 10/10, funny day, that was We Robot a year ago. Could Jupiter's announcement of 200x leverage in a strange way be a bullish sign and an indication of a higher parabolic move in the next couple of months? My thought is that with higher leverage thresholds, the price can rise in a banana fashion, but the smallest move in the opposite direction ensures that exchanges still cashes in on the degens. Very good question. So I put together a little table of, it's actually 250x leverage, not 200x. It's even worse than you imagined. But just to put things in perspective, the old max leverage, for example, if Bitcoin is 100x, now it's 250x. That is suicide. Let me explain why it's suicide. Because you get wiped out with a tiny move. And I recommend no more than 3x leverage if you are perping. But a 10x leverage, a 10% move wipes you out. 50x leverage, a 2% move wipes you out. 100x leverage, 1% move wipes you out. And 250x, a 0.4% move wipes you out. For perspective today, Bitcoin's up 2%. Okay, so the 2% can happen real fast. Let's see if there's any other cryptos moving today, up or down. Very volatile across the board. So be very careful. It's designed. And remember, you might think it's just you playing against the market with 250x leverage. And if you want to have fun and throw $10 at it, I don't care. Do that. But do not put any serious money, because Binance and Wintermute, they are watching you enter a 50x perp. Shout out to Ocean JJ for this cool little image. But it's so important. When you are perping, the wolves are literally at the door watching you, ready to pounce. Once you enter that trade, they're going to eat you alive. And they only need to move the price a tiny fraction to do that. Okay, so this is who you're playing against with perps. Great question. No, I don't think it's going to trigger the banana zone. I think it's actually quite irresponsible for people like Jupiter to do 250x. It's just going to wreck people. Next question, which is related to Jupiter. With 3.3x leverage, good man. I had a liquidation on Sol at 169.5. I got so lucky as I longed on Jupiter, and despite the wick to 168.8 or so, my entire position remained intact. On Binance, the wick was down to 141.28, and I would be 100% liquidated. I'm sharing this as I hope James will share this so more people start using Jupiter instead of centralized exchanges. Bingo. Thank you for saying that. I perp on Jupiter and I perp on Drift too, and I was fine as well. I would never, ever trust the wolves. It is just not worth it. And why I think Jupiter did really well during the crash. A couple of things. Other platforms went down because they weren't fast. They didn't have the Solana speed, and they were running at 10,000 transactions per second at that time. No hiccups. They have extremely strong liquidity, $2.34 billion in crash day trading volume, and other platforms went down. Jupiter stayed alive, including lots of centralized exchanges went down too. So be careful out there. Next question. I'm your Huckleberry. Thank you for all the incredible thank you all that you and the incredible AI team do. Being a part of this group has been truly life-changing. Awesome. Thank you for being part of the family. When perp trading with very low leverage, of course, yes, think 3.3. Da-da. I'm so happy when people listen. When perp trading with low leverage, is it better to use the underlying asset as collateral or USDC, or does it matter? My personal preference, when I like to perp like for like, so I can easily track gains. If I start with a position, say 10 sol or 100 sol, and I get in, I get out, and I get in, I get out, I like to know where I am a week later, a month later, and it's very easy for me to calculate. Has my bag gone up? Do I now have 400 sol versus 100 sol, or do I have 20 sol or 0 sol? So I like to perp like for like. Easier to calculate the returns. Next question from Mr. Burns. This week on CNBS, the Finkster said, we're just at the beginning of the tokenization of all assets. The question is a wild card to take in any direction you wish, but would love to get your thoughts on the endless possibilities you envision in a tokenized world. Cheers to you and your team. My pleasure. So this is cool. So I do believe the tokenization of everything will really help unlock a lot of value that's stuck in rigid situations like real estate and stuff. So let's talk about rigid physical assets first, and then I'll take us on a little path to my fantasy land. You can liberate things like holiday homes will be tokenized, just like that previous question. The victim of the Ponzi, they got a place outside the US or a place in the US. They can tokenize it. If they're only there 3 months of the year, tokenize it for 9 months of the year and then generate that revenue. And then you don't need to sell your Bitcoin. Ta-da! Fractional ownership will be huge, and it'll be automated rental income. Also, vehicles and equipment. So I need a skid steer to move some land. I don't have one. I don't want to buy one because I just need it for like one purpose. Well, but it'd be great to be able to tokenize, I don't know, a piece of industrial equipment or something and use it when you need it without having to buy it and service it and all that stuff. Also, assets shares trade globally with very low costs, no intermediaries, 24/7, which would be awesome. Like I always joke, we'll tell our grandchildren, oh, I remember back in the day, the market will be closed from Friday at 4 p.m. till Monday at 9:30 a.m. And they'll say, no way. What? And you're watching crypto go up and down and your physical stocks are stuck. You can't do anything. Yeah, it's weird. Very weird. Also, smart contracts will manage usage rights, optimizing access and utilization. And most importantly, you'll be able to vet things on chain so you won't be scammed by Ponzi's. Again, nothing but goodness from tokenization. Now, real world fantasies here. I don't know if it's going to work or not, but these are some cool things that could be considered. First of all, personal skills and time. You could tokenize your capabilities, tradable consulting hours. You might not need a lawyer full time, but you could buy 100 hours a year, or a CPA, or a physical therapist, or whatever. We just talked about physical therapy too. Tokenize it. Sell people a block of time. Get the money in advance and let them get it as they want it. Also, creative types, creative tokens into micro royalties with dynamic NFTs, etc. And then maybe other stuff like data privacy. You could license personal data for value, not surveillance. For example, your driving records. Tokenize forests or solar farms for carbon or community returns. I mean, the sky is the limit. Very exciting times. Lots of good stuff happening. Next, from Lucky Dragon. Is Enphase worth getting into at these lows? Does the fundamental analysis match the technical analysis still? Let's talk about Enphase. Enphase, that's been... it's funny. You'd think a solar stock would be doing well in this day and age with the cost of electricity going through the roof, but no. Somehow, they have no growth. and they got very high debt, not death, high debt. They got $1.5 billion in cash and $1.2 billion in debt. That's not good coverage as far as I'm concerned. And if you look at the blue lines, the revenue is not growing. It's flat to down, and the net income is flat to down. That's ugly. But digging into the numbers, I discovered for the second time today, we're going to talk about stock-based compensation. Sometimes it is simply too egregious, and I don't like it at all. Look at this. This is Enphase. The company's a turd, mismanaged, not doing well. Maybe as macro headwinds or people can't afford solar or whatever else. But the point is, should they be paying themselves so much stock-based compensation? They pay more in stock-based compensation than they have in net income. $50 million a quarter, like clockwork. And their net income is a fraction of that. So that, I think, is a problem. I do not like it. Let's look at the chart. Per the ATR model, which is designed to detect zombies, it's a solid zombie. It's at level 0.4, which is in the death zone. Trend is down. No signs of life. Hard to believe that was at $340 not too long ago. So be very careful with that. Don't throw good money after bad. Very important. Number one rule of investing, don't lose money. And finally, thank you to the team behind me for this. This is Jojo the Cat. We sponsored Rude Ranch, that cares for cats with special needs, diabetes, viruses, geriatric issues, and other debilitating conditions. Jojo. And I think Jojo is super old as well, if I recall, like 20 years of age or something. But maybe, hopefully, they'll have room for me one day. And tomorrow, DCA Live, usual time, the whole team back together. And I hope you all learned something. I'm going to do some live questions right now. That was the AI Bitcoin loop, which I find very exciting. Remember, as the pie grows, everybody grows. Everybody makes more money, hopefully. And again, thank you as well to Team Details and Sean D and K8 and everybody else. Doc Intern, hello, buddy. Howdy from the Austin Grand Prix. You lucky swine. I'd love to be there. For Tesla, MicroStrategy leaps to Jan 2028 with delta 70 to 75. How do we choose the right intrinsic to extrinsic value ratio? Can you show an example on an options chain? Let me try pull up an options chain real quick right now. Hang on a second. Options chain. Let me go get it. So I'll walk you through. Let me pull this up. I'll try to do this on the fly. Got me by surprise here. I'm just going to go to Yahoo. So I normally use NASDAQ, but Yahoo kind of works too. Let me see if I can share. Present. Share screen. Do. Boom. There we go. So here we are. Let's go out to, gotta go away. Let's pick the date. We'll go out to Leaps, go out to January 2028. Now, we'll look at the strike prices. I always like to buy in the money on Leaps where possible. So I'll be looking at the 400s and the 400s here for January 1st, 2028. You can see, whoa, hang on a second. They seem really, really cheap. Why are they so cheap? There's something wrong with this. Let me go to NASDAQ. Hang on a second. Tesla options. I didn't understand the Yahoo ones. So go to, here we go. Much cleaner. Thank you, NASDAQ. Much better. Let's just go calls and in the money. And that's pretty much what I look at. So we got the strikes here. We have the bid ask for, go down to get the proper strikes. Say the 400, be 176. That's more like the pricing. That's ridiculously expensive. Absolutely nuts. So basically what I would do here, I wouldn't buy this at all. I just buy the stock on margin and put down $200 instead of buying the option for 173. If you go deeper in the money too, after a volatile period, they're just so expensive. Like a $300, $219, but there at least you're half intrinsic value, half time value. And the problem is the hard answer, sometimes am I not? Sorry. Stop sharing. Kill that. I was sharing the wrong screen. Hold on. See, I shouldn't do this on the fly. All right, this is the Tesla option chain. You can see here they're just ridiculously expensive. Hope that's showing now. But yeah, you just can't afford them. So you know my trick from being in the community of how I make a way to afford them, but I would not be buying these right now. These leaps are crazy. Now, the only time you actually buy leaps is when the price is super cheap, when they're very oversold. If Tesla has crap earnings on next Wednesday and the price tanks to 380 and everybody's freaking out, everybody's ditching their calls, their leaps, then you swoop in and buy one. Maybe you get a 350 strike. Maybe you get a 350 strike for $100. Then you know it's going back to 450. Then you can be profitable when it hits 450. But buying now, they're just simply too expensive. So I hope that helps with that question. But yeah, guess what? When Tesla's beaten to hell, you just buy as many leaps as you can afford, because you got to map it back to your price target and then calculate your break even. Real simple. IZ55, time to rotate from miners into AI defense. Any defense picks? The defense pick I like is Anduril, but it's not a public company yet. That's what I'm trying to do, and I don't really look at defense things other than Anduril. Miners had a huge run over the last couple of weeks. Over the last 6 months, completely smoked Bitcoin. If you want a simple AI play, well, the answer is Tesla. That's easier. That's all I can say. DBF 430, James F1 in Austin is on lap 12. Thanks again. Oh my goodness, I am streaming during a Formula One race. That's terrible. I haven't watched a Formula One race in like 5 months because I haven't had time. But I will catch up, hopefully, if I get time. I'll watch them all. From James Voshigang in New Zealand, is the stock market ready to move to blockchain given Oracle Chain's incorrect data issues the other week? Is this an issue? Some of the oracles were sketchy, but remember, the oracles take feed as well from the centralized exchanges. They don't make up the price. They pull the price in and then distribute it out to help people do ARBs. So you can't blame the oracles. The oracles share what they're given, and the centralized exchanges are all over the place. Like Kraken, I think it fell below 100,000, whereas Coinbase fell to 106. So it's complete all over the place. So no, you can trust. If you can't trust an oracle, the oracle has no business being in business. So think about that. The oracles are fine, and the world is ready. Trust me. And thank you for your super stick as well. AR Ron, Psych Experience, Martello 45, BD McGee, Radrich, James Voshang, Bookhorn, Tostavin, DBF 430, Yunka, Hotel Goddess, Sigma 103, Sol Strider, Bitcoin Broccoli. Appreciate you all. That was a long one today. I'm out of breath. Hope you enjoyed the show. See you tomorrow morning. Thank you, everybody. Thank you, Sean D, T&D, and the whole gang out there. Have a good night, my friends. And Anjo, appreciate you. Bye.